Good morning and welcome back to Almus Market Mornings. It looks like the US Treasury Secretary Scott Bessent is putting his credibility on the line by making a fresh attempt yesterday to rein in the long-term borrowing costs from their multi-year highs, which sent the Treasury yields and the dollar down yesterday. The Treasury Department announced that it would at least double its planned purchase of outstanding 10-year to 30-year debt after earlier opening the door to a potential cut in the issuance of the long-term debt. And this new plan drove the US dollar to the weakest in 3 months. It also pushed yields on the 30-year bond lower as much as 10 basis points to 5.18%, moving it away from its highest level since 2007. Good morning, PR. Tell me, why is it that people are saying that Scott Bessent is the most interventionist treasury chief in decades, and why does the market seem to need this right now?
Uh, Thank you, Ishan. I would answer your this question, but there's another important development in the financial market, and our today's discussion I would like to title as uh, two central bank minutes, which were exactly the same. The earlier action were also same, and the minutes were exactly same, and the Treasury Secretary Bessent's yield twist. So I will come on the yield twist. How does this evolve generally in the basically financial market? But before that, it's very important to look at the central bank minutes. US Fed and India RBI's both minutes have came yesterday, and the decision in the both the policy. Uh, if you look at the both the policy segment, when 15 days back it was taken for both of central banks have kept pet on the rates. They have not changed the rates. But if you look at the minutes of those meeting, it clearly indicates that they were kind of a edge or verge of the rate hike, but they contained themselves. Uh, we know in the Fed there were three dissenters, and those three dissenters were looking for a rate hike. In case of India, if you look at the overall statement of even monetary policy in charge, Poonam Gupta, see the DG in the currently in the RBI, her statement itself is the inflation is likely to peak around 590. And if that is the number, if this is expecting, then definitely a rate hikes would be warranted. So these are the two central bankers, which basically kept the rates unchanged, but the minutes clearly reveal there was enough material to take a precautionary step, but they waited for both the central banks have waited for the further inflation trajectory. In US, inflation prints have been lower. Basically, after this meeting, even the payroll numbers were not good. Retail sales number was also not good, but it was not. Uh, it's not going towards the Fed target of a 2%. So that's US. In India, also inflation number were flat, but my the expectations that rate hike, market expectations that the rate hike would be coming is not. I would say that they are actually looking at the they are asking for a same in a right way and for the right thing. In India, 5-year OIS 640, 645 against the 5 quarter of a repo rate, and due to the flush liquidity of FCNRB, average borrowing rate or daily borrowing rate is around 504. There's a clear pricing of rate hikes in the market. Mm, there are two important points I want to highlight in the Fed minutes. One is basically minutes have also discussed of a WAS committee of the balance sheet or asset relook, which basically was kind of a so Fed members discuss that, and they say that rather than adjusting that the Fed balance sheet or asset side, it's better to maneuver monetary policy through rates rather than a rate actions rather than a asset action. That's one. Second, WAS has also put up a kind of a proposal rather than having 8 meetings in 1 year. Uh, why can't we have 6 meetings in 1 year? The decision has not been taken, but if the decision would be taken, it will effectively from a 2027 calendar year, not the 2026. So if they move to the 6 meetings in a calendar, that also will match with the RBI cycle. So yes, this is on the Fed minutes. Now coming to your point, Isan, is basically what Treasury Secretary Besant has done. So Besant had been earlier a financial hedge fund manager. He understands the markets. He had been a kind of a asset guy. Uh, so clearly, we have seen a quite a good round of yield twist in all kind of a bond market. When I'm giving a term of a yield twist is basically you are trying to twist the yield curve. Currently, in US yield curve, is basically suppose 2 year is at around 4% and 10 year is around 470. Uh, Somebody is taking a view on a yield curve saying that was this yield curve is not good. Why there should be expectations of a 70 basis point further increase when we are already at a higher inflation rates. So they will mention this that we will buy a long term. Now, Treasury Secretary does not have a power to print dollars in any kind of a economy. The money printing exercise can be done by central bankers. If same thing decided by the Fed what will do? They can buy 10-year bonds themselves and give the dollars. But while Treasury Secretary has to do this, they have to generate money. Now, how they can generate money? It basically, if they have got a short-term securities, they will sell the short-term securities and buy the 10-year, 20-year, 30-year securities. But if they don't have a suppose cash available, then what will happen? What they will do, they will issue a short-term securities, short-term T-bills, and those short-term T-bills will be issued. Market participants probably will buy those short-term securities, give dollars to Treasury Secretary, and Treasury Secretary used to buy those long-term bonds. Now, the announcement which came yesterday, uh, the announcement came when exactly US 30 years reached 19 years high. So before financial crisis in 2008, 2007 high was on 30-year bond yield was around 532 and it has breached yesterday and this announcement have come. Now, if you look at the overall impact, it doesn't have a same impact like quantitative easing because in quantitative easing, the new dollars coming into the picture, which has been generated by Fed. In this case, the money is not being generated by Fed. If it's not being generated by the Fed, why this should have this outsized impact on the market? We have seen gold rallying closer to 120, $130. Today morning, though, it has crossed 4,500, now dealing marginally below 4,500. US dollar index, which almost kind of a crash by 1%, currently dealing at 98.80. Now, this outside impact, whether it will last or not last, this probably the impact which has been yesterday and today. Whether they are looking for further some such steps, I have a doubt, but no, currently the market has gone that way. Um, Now currently, US Treasury 10-30 year is down almost 15 basis point. US 10 year is down by 10 basis point. Uh, I have a kind of a sense today, maybe India bond yields. Uh, if this would not have happened, the Treasury Secretary announcement would have opened 4-5 basis higher, looking at the Fed, looking at the RBI minutes. But this statement, sorry, by or action by Treasury Secretary uh, probably will contain the Indian bond yields. But none of these solve a very inherent core problem. The core problem is the inflation is higher, bond issuance sizes are higher. Uh, y- you are distorting the yield curve. When you are distorting the yield curve, equity markets will like it because they will feel that the rates are going to stay lower for much longer. Inflation is going to be there, and inflation is probably is a broadly uh, is a equities friend. Yeah, at this point of time, I would like to complete here. Uh, Anything? Okay, I would like to cover dollar rupee, but before that, do you want anything else, Isan?
No, Pankaj, I just wanted to ask you if there would be any effect of this on dollar rupee and what you think the range for this week would be.
So ideally, rupee should not get much impacted by it because rupee has got its inherent demand and supply equation. If you look at the overnight development, Brent oil has moved higher. The commodities which import are already moving higher. It's a gold, silver, which is going higher. Uh, Equities also in US went up, but it has corrected a bit, turned into closed into positive territory. My sense is this news is not going to impact rupee much, but yes, as a dollar weakness which has happened closer to a 0.7, 0.8% overnight, this can help dollar rupee by 15, 20 paisa. Maybe we will be watching whether 95.50 is kind of getting supported. That's at this point of our time, my view is, but we should be broadly 95, 35, 40 on a lower side, and 95, 80, 90 should be on a higher side for dollar rupee. And one another important tweet which I have seen, I've not read much about it, but I think uh, Mr. Trump has put up a tweet early morning that he's announcing a economic warfare on Iran. Any country, any person supporting Iran financially, economically, will have a severe impact by US. So that's the latest tweet came from Mr. Trump. So the impact of that need to be also watched. Yeah, thank you.
Thank you, Pankaj sir. And just to summarize, as PR said, he would like to name this podcast as the tale of the central bank meetings, as the decision in both the Indian and US central banks have kept the rates at status quo. But the minutes of the meeting portrayed that they are on the edge to contain the rates, and a rate hike is definitely on the cards looking at the inflation trajectory. And two important points from the Fed meeting that are to be noted is that instead of the wash balance sheet committee that was being discussed initially, the members have proposed that it is better to pave the way for the economy through the monetary policy. And also, Kevin Walsh proposed that we should have at least only 6 meetings in a year instead of eight. And this will also move and match with our central bank cycle. And coming to the yields twist, the US yield curve is worrying for the economy right now as the news came yesterday as soon as the yields breached a multi-high year level. And this move by the Treasury is not, however, comparable to the quantitative easing measure as no new dollars are actually being injected in the system. And the Indian bond yields are to be watched today as it should have opened higher, ideally due to the RBI minutes yesterday. But due to the central bank action, treasury action from the US, it will keep our domestic yields on the lower side. And when it comes to dollar rupee, we will be looking for the break of 95.50, taking the range to 95.30 or 40 on the lower side, but not much effect due to the yields action done yesterday on the currency. And thank you all so much for listening. And we'll catch up tomorrow with a fresh round of updates. Thank you.